The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Okay, folks, we are live now, folks. We'll kick things off. We got the S&Ps as we kick things off. Up 21 points this morning. Quite a run overnight, up to 39.06. We're backing off a bit. 38.83 this morning. A little bit frazzled coming into it. I had to replace a mic, replace a battery. 2023 starting off with a bang, but we'll get into it. NASDAQ 100, we're up by about 0.8% right now, 11,117. You were as high as about 11,160 overnight. The Dow up about 0.4%, 33,438. And the Russell right now up by 18 points. Crude starts the year off with some negative prices. Check out the acceleration overnight. We're up to 81.50. You need a chart. Okay. I'll get there, folks. I wish we had gone to a commercial as I was asking, but that was not the plan, I guess. Okay, we should have my chart. Let's do that again. We'll start it off, folks. S&Ps up about 24 points. There's the run overnight to a high of about 39.06. We back off. We're up on the NASDAQ 100, up about 100 points. We were as high as about 11,160. The Dow is up about 0.4%, 11,435, and the Russell's up a full percent right now at 1788. We jump to commodities. There's your price of crude. We talk about a drop-off, man. Crude starting things off with some volatility. Crude off almost $3 from where we were overnight. You see the slide from 81.50. We're down right now the 78 handle, 78.90. We jump over to gold. Gold contract. We've got some volatility, man, to kick off the new year. Up to 18.56. We're at 18.44 in gold. We jump to notes and bonds. Higher price, lower yield from the extension we had on Friday, a 111.28. Just like that, you go from a 111 handle to a 113 handle. Over the weekend, we're at 112.30 right now in the 10-year. That's up 20 ticks. The 30-year is up a full point and 16 ticks at 126.27. We get some Fed speak this morning from Mr. Dudley. We'll get into that in a moment. We jump over to the volatility index. The VIX sitting at 23. Now, interesting, right? We got a very elevated market in terms of the S&P's up 25 points, and you have the VIX. Maybe the VIX is going to start acting normal again, more normal, at least reacting. Not normal that would have the VIX up $1.50 off of Friday action. Meanwhile, we've got the S&P's up 25 points from there. Not usually how it goes, folks. Maybe coming into the new year, some risk premium. Even with a positive market, we're 19 minutes away from the opening bell, folks. So the markets have not even begun trading in the year 2023 as of yet. And we got to jump around to some currencies, excuse me. There's some action on currencies for you, man. You get a spike at about 3 in the morning from 103.60 up more than a full point to almost 105. We put the dollar back on a daily. I mean, it's been a slow slide to lower prices, but a little bit of a base here around 104, and that's quite an extension. Now, the only thing I'll say is we got that extension about 2.5 weeks ago, December 15th, but we're chopping around. Maybe we got a little bit of a floor in the dollar. We'll see. Interesting, you have dollar strength today as we have lower rates, right? Dollar strength as we're seeing lower rates. Not the usual relationship that's been going on, but nonetheless, that's the case, and you jump over. I mean, you got dollar strength at the same time that we have some commodities in terms of gold trading higher, but yen, no. We got a lot of divergent action going on right now. There's your yen. We're at 129.50. We're back to 130.63. We jump over to the euro US dollar right now. Euro US dollar, and there's a drop off for you, man, from 107 to almost 105. Trading at 105.66. What's going to happen with the euro, man? That is quite a drop off indeed. And you get back. I mean, look at November 15th, folks. The euro is at 104.8. We're at 105.6 right now. Almost all of that action back like that. We'll see where we go from there. All right, let's jump around to some of the headlines we got pulled up, where we're going to kick things off. Do we have Mr. Dudley's? I thought we had him up. We'll start it right there. Yeah, it was. It was the first article. Recession pretty likely, and that's ex-New York Fed Chief Dudley. Nonetheless, talking about recessions, you're going to be hearing a lot about it, man. Everybody's going to have an opinion. we're going to see where we go. The data is going to decide it, folks. That's the bottom line. And it's also going to decide where the Fed goes, which is going to be an important factor. I was listening to one analyst out early this morning on Bloomberg, and he was saying, if a recession comes, this will be a Fed-driven recession, and the Fed, because they would over-tighten, would be able to then cut to try and pull us out of there. Yes, that's how the theory goes, folks. But when you hear that type of rhetoric, here's what my mind goes to, okay? Basically, they're saying, yeah, if the Fed overshoots and pushes us into a recession, the Fed is going to then be able to cut to pull us back out of it. Yes, that's true, okay? But the same thing is true when you talk about the monetary policy that got us into inflation, okay? And yes, there's a lot of opinions about whether it's the level of government spending, the stimulus, et cetera, and that all contributes, man. That all contributes, okay? But guess what, folks? We are in a rate of global rates that have been zero forever, if not negative, okay? And inflation is not a domestic problem. It is a global phenomenon that goes beyond spending in government. It all contributes, okay? And the tough part about this conversation is it requires nuance, which is very difficult to have when you have differing opinions, okay? It involves context of everything. Point being, you could say the same thing that got us into this, and you see how hard it is to get us out, right? You could have said, well, we're at 0%, but if the Fed causes inflation, guess what? We have all the tools in the book to just hike rates and get control of it. And how's that gone recently? Not as expected. So if we do overshoot on the recession, keep that in mind, that it's not as simple on one way as it is on the other. And that's what we're going to get to find out, man, as we kick things off in the beginning of 2023. We got the technical difficulties out of the way, folks. Stay tuned. We'll be coming back. We got our man Kevin Hincks. Everybody's back, folks. First trading day of 2023. Stay tuned, folks. I'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures up 28 points right now. That's about 0.75%. NASDAQ 100 up a full percent. You have the Russell up a full percent as well. And we got the Dow up about 0.5% as we get the opening bell in 12 minutes to kick off 2023 trading. Let's jump over to our man, Kevin Hincks. Every trading day, folks, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your hosts, Kevin Hincks and Tom White. They do an outstanding job, folks, of breaking down the action. They walk you through hypothetical trade setups. If you ever want to understand more about options, check out the program, folks. We're very fortunate to have it every day at noon here. Kevin Hincks, Happy New Year.
Good morning, Tommy O'Brien. Happy New Year to you and your family. Big start to the year going on right now, Tommy. And you know what? This year is starting with mixed messages, right? What does a sharply higher dollar mean? And how is that? Why is the dollar up and gold futures up? And then you've got sharply lower interest rates and slightly lower crude oil prices. Tommy, what we watched at the end of 2022 is what we're watching to start 2023, Tommy. The U.S. dollar, yields, and crude oil prices, Tommy.
And you know what else? And you're pointing out some great stuff, man, because maybe there's some kind of rotation of what's impacting the markets, at least because we have that difference going on. And also, Kevin, we have an elevated VIX at a time that we come in green across the board, man, with the S&P's up 28, NASDAQ 100 up a full percent. And I have a VIX right now that's was at 23. We're at 22.99 with a little bit of a spike. Maybe traders back in the seat, whatever it may be. We kick off 2023. Kevin, where do you go to as we come into this new year? Now, we're going to come into an earnings season, I know, in a couple weeks. But what's on your radar? Not necessarily big picture, but as we go down the line here, we're going to get data, we're going to get Fed. What's on your radar coming into the new year, Kevin? Well,
first and foremost, I'm really going to watch Tesla's price activity today, Tommy. Why? Because, the stock's going to open lower off of a 40% increase in production. Why? Because they didn't hit their targets. Well, in the history of Tesla trading, close enough has been good enough. Now let's see how that holds today. I want to see how Tesla finishes the day with all the problems in China, with everything going on in the world right now. For Tesla to increase production and sales by 40% is a pretty big deal. So we'll see how that price action goes. Then, remember, we're going to watch Fed minutes on Wednesday. We get JOLTS and ADP and unemployment data. So a lot of unemployment data this week, Tommy. But I still think, China has made some comments. Xi Jinping made a political statement over the weekend. The IMF has made statements over the weekend. So that affects the currencies. But we still have a couple weeks or so, not till January 13th when the financials start with earnings. But this is right in the deep end, Tommy. We go with a lot of economic data the first week.
It's pretty cool in terms of how things kick off. We're starting the year off with positive prices. But what do you make of some of those relationships going on with currencies, with yields, with markets, with volatility in the VIX? Pretty interesting when we get trading beginning in less than 9 minutes from right now. I was watching Bloomberg this morning, Kevin, and I think it was Bloomberg, whatever it was, they had Dudley on there. And one of the things he said, and I'm sure people are thinking this, whoops, I got audio playing. One of the is, and I get the quote up here, a recession, and this is his opinion, okay? Recession is pretty likely just because of what the Fed has to do, okay? But he says what's different this time is that if we have a recession, it's going to be a Fed-induced recession, and the Fed can end the recession by subsequently easing monetary policy. And I said, man, I'm not sure that's how easy it is, because if that was the case, then if we got inflation, you could just raise rates and eliminate inflation. We've seen how sticky that has been. So if we get an inflation, if we get a recession, that's a question in its own right. How bad is it going to be? But what do you think of that general take, man? Because I think that take is almost the bull case of the bear case. As in, if we get a recession, what do you think if we do get those numbers to come in, or that general statement, Kevin? Because there's a lot of people saying, do we get it? If we get it, what's the Fed do? How hard is that? I'm big picture, but what's your general thoughts on that kind of topic?
Yeah, it's just not that easy, right, for the Fed to cause inflation and then take it away. Because let's face it, Tommy, in late December, we just passed $1.7 trillion in more spending. Also, corporate income taxes are going up as of January 1st. So the two things we were worried about, inflation and corporate earnings going forward, those two are both under pressure right now. So the question that everyone has to ask is the Fed stopping interest rate hikes enough to have stocks rally, right? Do they have to lower them for stocks to rally? And it looks like right now, with yields lower to start the day and stocks higher, that lower yields is leading to stocks being strong. But Tommy, this could be just, beginning of the year, inflows into funds, some buying to start the year. How long does that last? That initial jump at the beginning of the year. But lower yields mean something to stocks, Tommy. But how about the higher dollar, higher gold prices? That is a head scratcher in itself. Let's see how that plays out throughout the day, though. So there's a lot going on here, a lot of cross currents. We're dealing with the U.S. dollar. That's that relationship trade. We're dealing with interest rates. That's the Fed. And then we're dealing with corporate earnings going forward and crude oil prices and all these other things. They're all going to be thrown into a big pot. We're going to come out with a stock market, Tommy. We'll see what happens.
I can't wait to see some of the trends, man, because I know we kick it off and we got fireworks to begin things, and that relationships, man, whether you're talking about yields and then dollar and then gold. I was jumping around the charts this morning. I said, okay, am I missing something here, right? Not really. This is how it's going, and we're going to find out why, folks. With that in mind, as you said, we don't even start trading in terms of market hours for more than 5 minutes for the year, so we'll see where we go, man. With that in mind, what are you guys talking about for the first trading day of 2023 on Fast Market at 12 today, Kevin?
We're going to talk about all the names that made news over the holidays. We're going to talk about Tesla in the first segment of the show. Then we're going to talk about, Jenny Horn's going to come on and talk about Apple. And then we're going to talk about, and Mike Fuller is going to do a presentation on Southwest Airlines or airlines in general. And we'll look at Southwest. And then we'll look at Block or Square, as people know it, and look at digital payments and how those are coming. So Tesla, Southwest Airlines, and Square today, Tommy.
Pretty cool. And some of those charts, man, especially Square, those payment processors, boy. And Tesla, you mentioned Tesla numbers coming out, I believe it was, yesterday? Yeah. And then I saw the news this morning that they've got their number 2 guy now was running China. So interesting as that, maybe Tesla makes the China boss Tom Zhu. Is that potentially highest profile exec after Elon Musk? So, of course, Elon in the press. We'll see. Tough year for Tesla, man. They're going to open down $4 to start this year. Well, Kevin, it's appreciate talking to you as always, man, and wish you a happy new year, and we'll be watching at 12 o'clock today, man.
Thanks for having me on, Tommy. Happy New Year again.
Happy New Year to you. Folks, tune in. Outstanding show. You heard it. They're going to be talking about some great stocks, man. Tesla, Southwest, and yeah, how about that chart on Square, man? You pull that up. I mean, the only thing you could say about Square is that it's actually just trading where it was in June, building a nice little base, even as the market sold off a little bit over that time. You look where the market was in June, yeah, NASDAQ pretty close, I guess. A little bit more volatility, but you take a look at Square right down at those levels, and boy, Tesla, yeah. So they missed the estimates on their numbers. We'll pull that up maybe after the break. But I thought maybe even bigger news was that they make the China boss number 2 behind Elon, man, because Elon's got a lot going on. The number 2 guy at Tesla is an important role, and Elon wants it to be the man who's running China operations. Probably an important factor there. Stay tuned, folks. We'll be right back for the open.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get markets open. And you're dropping a little bit. We'll see where we go, man. Pre-market action before we've even traded for the year. Yes, it probably matters in currencies. It probably matters in notes and bonds. But in terms of futures prices, not as important. We'll see where supply meets demand as the market opens right now. And we have markets holding up with the S&P about 0.5%. NASDAQ 100 up 0.8. We got the Dow up 81, the Russell up 17. Let's see how Tesla's trading on that news, on their numbers. They're down 4.5%. Tough start to the year for Mr. Elon Musk again. Let's see how some of the FANG stocks are trading. They're going to be talking about Apple as well. Ooh, watch out, folks. That's quite a drop-off. And you are not stopping right now on Apple shares as you just went from 131 and change to blew through 130, and you're at 129.74 right now as markets giving back some of those pre-market gains. You know, interesting. Anytime you see that VIX, keep it on your radar. When you see a very elevated VIX, you see a market in positive territory, sometimes indicative that those gains, not necessarily strong conviction when you have people buying so much extra risk premium that they're willing to pay for it. The market's not usually accelerating upward as people are gladly paying more for risk premium if it's going to cascade to lower prices, right? Doesn't work every time, but it is one factor that you should pay attention to because when it does happen, and sometimes it's really exacerbated prior to the open, it will indicate that those futures prices not necessarily indicative of the strength that they might be putting out when you have a VIX that's elevated. And that's a very elevated VIX, man. When you have a market that's been up 30 to 40 points almost on the S&Ps overnight. We jump to notes and bonds. The trend continuing. We got the 10-year right now up 22 ticks. We got the 30-year up a point and 20 ticks. Yeah, and that's bringing us to the 10-year yield, 3.74%, the yield on the 10-year. And stocks open higher on the first trading day of 2023, man. But we know how this market goes, folks. And 18 points in the S&Ps is a heartbeat right now with the way that we're getting volatility. All right, jumping over to some of the articles that I pulled up here. Gold, right? There's some movement for you, man. And gold extending those gains up to 1850. Interesting. Let's see how the dollar is trading. So as Kevin said, right, you were jumping around. I mean, yeah, you have a little bit of a pullback, but you have the dollar going from 103.5 to 104.5. Dollar strength. So even priced in a stronger dollar, gold still catching a bid. If we ever get movements right out of the gate here in 2023, pay attention to them, because last year, man, we had moves right out of the gate, and you got a couple reprieves in that market in terms of when you could potentially get out. March 28th, the market was at above 4,600. That was the second chance right there, folks. But boy, quite a race out of the gates in terms of we were in the S&Ps trading at 4,200 by January 24th. So this market moved quick, and yeah, maybe we'll see the same thing coming out now. It's going to be interesting because you do have a different year setting up in terms of the rates, and the Fed was last year. This one's going to be about, as the Fed gets inflation under control, how quickly does that happen? How willing are they to stop? And then as we near the 3, 6, 9, 12-month marker of this year, I expect the economy is going to be what matters most, because the Fed can only go so far. And when they stop, that's going to be one acceleration in the markets, okay, because we don't know when they're going to stop yet. And he could go 25, 25, 25 or something like that if the data's not lining up, okay? I imagine they'll get to 25 at some point soon because we're at such a restrictive policy and they're going to let it catch up. But if the markets, if the numbers are not moving to the direction they want, maybe they just stay, resolved with 25 until they really think that they can go flat and let things catch up. But I would expect that they have a couple hikes at least in them with the way that the numbers are lining up. So you go 3 months down the line, then you maybe talk about, are we going to stop? Maybe you go further 3 months, and then the discussion starts becoming, when do we cut? Because we're obviously in a very restrictive policy 6 to 9 months down the line. Hopefully we're dealing with declining prices. You have to remember, we're going to be dealing with comps. I mean, we're dealing with comps from September in 9 months, and those are very elevated comps. And it would take a dramatic rise yet again of 8, 9, 10%, right, to see those types of numbers. So you're going to be helped by the comps. That's going to come down the line in 6, 9 months. So where did the numbers go? I mean, we get earnings in 2 weeks, man. The banks kick things off. Let's see when they do kick them off as we come in. JP Morgan, you jump over to the Analyze tab, you go right to the earnings. Yeah, January 13th, our man Kevin Hincks has it pegged. So you're talking about next Friday. 2 weeks, man, 2 weeks, but you're talking about 10 days, 10 total days, not even 10 work days, folks. 10 days, we kick it off with JP Morgan on that Friday. Let's see who else we got. Bank of America is going to be on that Friday. Goldman. Nope, Goldman's the next Tuesday, it looks like. Probably Morgan Stanley is next to Goldman. Yeah, Morgan Stanley will be on the same day. Wells Fargo back on that Friday. Yep, Wells Fargo, Citi. We got all the banks 10 days from now, January 13th, to kick things off. Let's see when the FANGs line up. All right, January 26th. So we got about 3.5 weeks. What is that? 3 weeks from Thursday, we get Apple. So that's the final week. The final full week of January is going to be the big week of tech stocks then, usually. Yeah, there it is. What's that? Tuesday, January 24th. All right, Microsoft is Tuesday. Amazon pushes things to February 2nd. When's January 31st? All right, so you can see even Google and Amazon, is that right, are going to be the following week. So things are going to be spread out a little bit. Sometimes you get Google, Amazon, and Microsoft. Yeah, 24th. Apple. Let's see on Meta. Meta's February 1st. Okay, so the final 2 weeks are going to be the big tech week in terms of the week of January 23rd and the week of January 30th that extends into the beginning of February. What was that? Yeah. All right, let's see what else we had pulled up. Jumping to gold. Yeah, so gold catching a bid today. Gold does not have earnings. Let's have the chart catch up. So overnight we were at 1856. We're going to go a little big picture on gold here. Now gold, I mean, if you go back really to 2018, you pull right back to the 50%. We have a little bit of an acceleration here. And if you're talking about channels, folks, I mean, look at that nice extension. And even on the downside, Now you slam out of this. All right, it didn't take, but even if you're just talking a trend line, but the bottom line lines up pretty well on the bottom portion of this trend line as well. You didn't quite make it in the lows of September. You accelerate out of that area. And, just for some context here in terms of where we're bumping into from that move lower, you're coming right into the 50%. So where you're looking for possible areas that you might face a little heat, I mean, you're going to have maybe potentially a little bit of heat at the 618, 1906 area, maybe 1900, a nice round number. That's also the area in gold that you chopped around a little bit here. But yeah, it's quite a run from 1618 back in November, folks, and a lot of analysts talking about gold. It'll be interesting to see how the dollar moves. The only thing I'll say is, right, the whole conversation is, man, if we get a dollar pullback, that's good for gold. Folks, you're getting a higher gold price even in the face of a higher dollar today. You put this on a daily, that's quite an acceleration higher. Now, there's divergence here going on in terms of which currencies are hitting which here, because the yen has strength actually today. Okay, a lower yen is strength. So the dollar component getting really weighed by the euro today, which is down dramatically. Let's see, do they have no audio on the den? We're dealing with a few. Maybe if somebody can just confirm if we got any audio on the den. All right, folks, we're only 8 minutes into the trading year. We got action in currencies. We got action in commodities. And what do we got, folks? We got the S&P up 24 points, NASDAQ up 100. Stay tuned, folks. We'll be right back after the break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Well, welcome back, folks, and we have the market up in pretty high, almost highs for the session. Excuse me, up 39 points, trading at 3,900. NASDAQ 100 up 151. And you see the market's near basically session highs right now. I'm going to jump to the dollar. So it's interesting. We have the difference going on with the dollar to yields, but guess what? Things are coming back into focus, and maybe that 104.85 was irrational on the high side here. So what do we have? Going on as we now have yields holding. Okay, so the conversation is a little bit easier when you have, what do you have? You have a weaker dollar, you have lower yields, and you have the market higher. Maybe that's where we go. Now, what does that mean? Does that mean that the market thinks we're going to get a hold of inflation? Does that mean that we're going to get a hold of inflation pretty quickly and we're going to cause some damage to the economy, causing rates to have to get cut? It could potentially mean that, but it is interesting in terms of the dollar reaction so far. Yields have not moved. Okay, the 10-year, to pull it up, has been up about 20 ticks. Yeah, you ticked around a bit, okay, but we're sitting up 20 ticks, which is pretty much where I started off the program. Up 20 ticks, which is where you were at 8 o'clock, which is where you were at 6:30 as well, and which is where you were at 4. The dollar index, yeah, quite the drop-off, man. We're getting lower dollar to go with lower yields, to go with a market that's liking that, up 35 points, trading at 38.96. We were as low on the open right there at about 38.72 on the market. All right, jumping else. What else we got going on? Jumping to Tesla real quick again. Down about 6% for Tesla. And this is where China is going to play into so much. iPhone City is back at 90% capacity after COVID turmoil subsides. So it's going to matter as it goes through the countryside in China as well. But if you have the plant back at about 200,000 workers, folks, 200,000 workers. I mean, that'd be like 2 out of, I mean, I don't think we have anything like that. I wonder what the biggest, does anybody know in the den? What do you think? What's the biggest plant in America? How many workers are on staff in there? Because operating with 200,000 staff, and that's only at 90%. But boy, that says a lot, as in it probably ripped through whatever it's going to rip through in the factory, and they're back to wherever they are. There'll probably be some other spikes at some point, though, as we've seen, wherever it is. But, yeah, that bodes well for Apple. Guess what? That's going to bode well for maybe some of the other companies like Tesla over there that are producing their cars, their Teslas, their vehicles, their phones, etc. And you jump, let's see how Apple's doing on that news. Yeah, Apple with some volatility, basically flat right now as we have the markets. I mean, you get the NASDAQ 100 up more than 1%, and we have Apple flat. Let's see how some of the other FANG stocks are kicking things off. So Amazon catching a little bit of a bid to kick things off, up 2.7%. How about that? They got beaten down hard, man, when you talk about last year. Walmart up about 0.6, seeing how if it's retail or if it's just tech stocks. Looks like it's tech stocks, man. It looks like, you know, some of these stocks. Let's see how some of the growth stocks are trading. Zoom's up 2%. Yeah, they're liking weaker dollar, lower yield, tech stocks higher, folks. Let's see how Kathy Wood is kicking off. Can't go much worse than the last couple. You're up 2.3% to kick things off. Started off last year at, 31, closed it off 31 and change. And boy, that was from $97 last year. And that was from $159 at some point the year prior. What else she in? Teladoc up 4%. Yeah, I mean, we got market giving back some of it, but it looks like really these yields playing into focus in terms of what's going on. What are some of the other good growth stocks, et cetera? Roku's always crazy, up 2%. DraftKings, some of the gambling stocks, up about 1.7 right now. See how Penn's doing, up 1.2. And boy, that can be a segue to football, man. And if you happen to see it, folks, horrible injury in terms of Damar Hamlin, and that's on a player is in critical condition, so send some white light and some prayers as he's the Buffalo safety, and the game stopped in the first quarter, and he's in critical care, and so hopefully he pulls through. Young guy, and man, football, you know, it didn't look like that bad of a hit, but boy, those hits are just always so intense, man, and so boy, thinking of him, that game. It was a weird scene where I was actually watching the game, and I feel like they should have called it much sooner than they did, and, you know, not to lose focus of, man, just hopefully he's okay. But it was a weird scene watching that game, having it be suspended for so long and then not called. And, you know, I feel like the commissioner and the NFL should have just called that pretty quickly, man, because it was a weird deal going as long as it was, knowing how serious it was. And So it was intense, in a big way. But man, young guy, football, surreal. So send some love and some prayers out to him and his family, and hopefully he bounces back. All right, back to the markets. Let's see what else we going on in terms of articles we got pulled up here. We'll jump to China. They vow to hit back at nations imposing COVID travel curbs. There's always more variables of risk, folks. Some of the articles I was reading last week were saying you got 50% of people on flights from China with COVID. You're worried about variants coming in if you have that big of an explosion. I mean, what do they got? 1.3 billion people, and they basically all have to get it. There's going to be some new variants possibly that come out of that, okay? But so as in, you're going to see the testing people coming from there, and if China's going to ramp things up, what happens, right? But they're ready to get over the hump, man, and I'm sure that they don't want to have that black mark of everybody from China getting tested, so it's going to be another kind of variable that's in play. Yeah. This one's interesting in cars. Inflation won't stop the 2023 auto sales growth amid chip recovery. Auto sales estimated 13.2 million rate. New car sales likely hit lowest pace since 2011 last year. They're going to ramp things up. Cars, chips were a big problem. That's why prices were rising so much. You're going to see some of that backlog come out of it. The net effect is the U.S. auto industry is expected to grow by more than 1 million vehicles to about 15 million because you have those chips. And strong demand as part of it as well. Interest rates is a big one, man, but they're planning for 15 million, and they have contingency plans plus or minus off of that. Retail sales of new cars in December likely rose 4% from a year ago to 1.27 million. That's still short of what you'd see, which is 1.5 in December. Yeah, and you got pent-up demand. I'll tell you. Me personally, I've held off a little bit, and part of it is those rising prices in pretty dramatic fashion. I'm probably going to upgrade and try and get a little bit of a bigger vehicle. So that demand could be pent up. I'm not the only one that's seen prices rising forever, folks. And said, maybe I'll let, the chip shortage and everything get yourself out of that in terms of work its way out. Yeah, they break down just a number of different things, big factors, big sales. And Tesla, we'll see how Tesla goes, man, because Tesla offering promotions, folks. I mean, you saw it coming on the numbers on Monday, right? Look at it's dropping off even more. They should not have to be offering massive types of promotions to bring people into their vehicles. They should still be a pretty premium vehicle, but that's not what's happening. And you kick off the year down 7.6%, folks. 108 was the low last year. We're at 113.91 right now for Tesla shares. We get the S&P giving it up pretty quickly, man, up 11. Look at that give back. You just touched a price point of what, 38.66? We were almost coming into negative prices, and we get the NASDAQ giving it up as well. Let's see how the dollar's trading as we keep. Yeah, holding it about 104.2 for the dollar index. We got the VIX right now, sitting right where we opened at about 23. Stay tuned, folks. One more segment. We'll be right back after the break.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So last year we saw the high on January 4th. Markets open on January 3rd. We saw the high on January 4th. Hopefully we just didn't see the high on January 3rd because that was quite a sell-off, folks. We are now a solid 40 points off where you were pre-market, and we are now a solid basically 40 points from where you were coming into that high at 39.01. You just traded down to 38.61. You gave it up in the span of what? Yeah, we're only 24 minutes in the trading day, but you get the Dow actually negative. The NASDAQ gives it all up as well. NASDAQ 100 only up by 12. We get the S&Ps up by 3. Crude, 79.58. You're catching a little bit of a pop in crude. We have gold pushing the highs right now at 18.53. We're up at 18.56. That's quite an acceleration. 7 in the morning, you made it all the way down to 18.36. And you jump to notes and bonds. The trend's continuing. Higher price, lower yield. Okay, and then you jump back to the dollar to see where they're related so much. 104.28, quite a pullback from pushing almost 105 this morning. But even with that, you got markets selling off, man. Gold contract accelerating higher, and we have the yield starting things off with lower yield, with the 10-year up a solid 24 ticks as the market continues. We might get red S&P. Yeah, there it is, folks. Red almost across the board. Yeah, the Russell was up a full percent, even more than that earlier. It's the only index in the green right now. Pretty quick reversal. Not exactly the strength you'd want to see coming out of the year, but how do you see strength coming out of the year when we got so many questions, folks? I mean, Kevin Hincks laid it out in terms of the earnings start, banks in 10 days, right? We get ADP payrolls. We're going to get non-farm payrolls. And we have the Fed coming up that they are going to keep hiking as of right now. And then we have recession fears. So there's a lot to get over. When the Fed stops hiking, that'll be one step. And then you really have to see how the economy does, because they're going to keep those rates there until we roll over on inflation, and we got a ways to go, man. So the market, guess what, though? Folks, put your stops in place, because we have a two-way market, and you just saw it. 40 points up, 40 points down, and just like that, we're flat, 26 minutes into the trading day. We got everybody back, folks. Live programming all day. We got our man Basil Chapman coming up next. We have our man Steve Rhodes. Fast Market, you heard what they'll be talking about coming up at 12. Larry Pesavento, Dave White, Tom O'Brien back. Everybody live till 4 o'clock. Thanks for starting your trading day off with me, folks. I look forward to seeing you tomorrow. Stay tuned for Basil. Have a great one.